Welcome back to the What's More podcast. I'm your host, Quinton Harrison. We're dialed in for episode 164 as we head into a two-part series of the Lending Update. I'm joined by my standing co-host, Daniel Halverson from Bank of England Mortgage. Thanks for joining us as always.
Let the fun begin.
Yeah, man, I felt like you were just here. It's probably because we're jamming in two episodes here in the, actually 4 in the month of May. But hey, great update here. Lots going on. Very, very impactful. Lots to unpack. So let's start with this. One of the things that real estate agents, if you're listening to this, or mortgage lenders, if you're listening to this, is that we talk about like databasing and we talk about how to get your database to work for you. But for databasing, a lot of people is just putting something in a CRM and just be like, sit it and hopefully forget it, right? And that maybe the people will call you back. Obviously, those that are really good put a lot more effort into that. But what I like about what you're about to talk about is there's a way to make those calls or maybe contacts come back to you. And it's something that we haven't seen, and it's pretty cool. It's kind of almost like you're supercharging it. But go ahead and kick it off here about the supercharging of a database, because you're real good at that's one thing I admire about you. You have one hell of a database, and 60% of your business is your database. You do a hell of a job with it.
Yeah, I think that the overarching theme here is we're firmly in a market now where you have to go out and find opportunities, and staying connected with people you've already done business with is a really good way to do that. And, it's funny, we've said a few times in the mortgage world, there's all this technology, and yet the cost of doing loans is going up. So there's a lot of technology out there that you wonder, are we spinning our wheels? Is this really going to help me? A lot of that stuff's only as good as you use it. But essentially we have a new product that we've rolled out at Bank of England that allows for our real estate partners to essentially partner up and send a co-branded monthly property report to our customers that tracks a number of different things, from their equity to options to sell, buy a move-up home, access their home's equity in another way. But the coolest feature is that essentially this service has compiled what they call a pre-mover score. Mm-hmm. So they have created an algorithm that they say is 72% likely to determine who's going to sell their home in the next 12 months. So cool thing about that is essentially, as a real estate agent, any customers that you want to upload to that database, you have access to that information. So in this instance, we're using technology to more effectively market to the people that we think maybe would be the most interested in hearing what we have to say. So it's creating opportunities, but using technology to aid you in determining where should I focus my efforts, right?
Right. I feel like one of the hardest things with your database is you hear these techniques like, call from A to Z and then B to et cetera. And so you work your way back in, and it's almost like a shotgun approach. Like you're like, well, I hope I'm getting the right person at the right time, but maybe I'm missing the right person at the right time because I already called them. But like staying in front of people, you have emails that are generic that does that. But this almost like takes your database, and I don't like the word funnel in this case, but that's what it's doing. It's getting it down to someone that you're not doing a shotgun approach. Like you know exactly who your target audience is at that point when you make that call.
Correct. Yeah. And I mean, a lot of people use their CRM. It's just canned, pre-written content that goes out, and it's better than nothing, right? Bad marketing is better than no marketing. But the cool thing about this service is it's a custom property report that the homeowner is receiving about their home, and who doesn't want to see what's going on with their home? For a lot of folks, it's their largest source of equity, right? There's their largest portion of their net worth. So who doesn't want to see that, right? And I think it comes at a good time where back to this Fannie Mae Home Purchase Sentiment Index that I didn't know was a thing until a couple months ago.
It's bad.
But, according to Fannie Mae's Home Purchase Sentiment Index, 67% of the people that responded believe it's a good time to sell their home, which is the highest level in 2 years.
Yes.
It's also probably why you're seeing some more inventory trickle onto the market here of recent. So you've got a lot of sellers that are saying, okay, well, even though rates have gone up, my home is still going up in value. So it's clearly a good time to sell, right? So if we know more people are interested in selling, and now we can access based on this pre-mover score, which like any technological thing, is not going to be perfect. But now I can determine, okay, based on the number of people I've got in here are the people that are most likely to maybe transact. And if I'm specifically making phone calls and only have a limited amount of time and I can't get to my whole database, well, now at least I can start somewhere, right?
Right.
So, like I said, it's just an opportunity to use technology to stay in touch with your database and maybe just do it more effectively.
Do you think that 67% in that sentiment, how many of those do you think are people that are just sitting on the sidelines? We call them locked in. But how many people do you think are just sitting there like, hey, I'm waiting for this rate, or I don't know, like I'm waiting for more equity? Or do you think that 67% of the people are ready just to sell now? Or do you think that they're sitting back waiting?
Well, you could think it's a good time to sell and not a good time to buy. And according to that sentiment index, I think that's exactly what the results show. So there's probably a good segment of people in there that think it's a really good time to sell, but don't know where they would go, and thus they're not selling.
Yeah, I think that goes hand in hand with the consumer confidence index that came in last week from Michigan, University of Michigan, and it was down. Matter of fact, it was the lowest it had, not the lowest ever, but the biggest drop we've seen from month to month in the history. I think it was quite substantial, and the confidence was essentially around spending. So it might go with what you're saying right now, which is, hey man, it's great to sell, shoot, but I don't want to go buy anything right now. That's kind of what those two sentiments are saying there. So, but what's interesting is these homeowners, as we kind of segue into the next portion of this, the homeowners, man, their equity continues to peak. It's not like they're shrinking in their equity. And this is a big difference from 7 and 8 and 9 and 10. We get asked all the time. There was a upside down equity position. Right now, equity is continuing to go and grow, and it's not going backwards. For all those people on YouTube, there are these echo chambers about a housing crash and a bubble and what's going on. Like, it's not happening, and it hasn't happened. And we're seeing tremendous not only resiliency in the housing market, but growth. And I think that if you're a homeowner, you are experiencing the benefit of that. If you're not, and you're sitting back waiting, well, you're missing consistent opportunities of growth there.
Yeah, I mean, it's a heck of a time to be alive. Interest rates are at multi-decade highs, and yet home prices keep going up. So, we continue to set new peaks in equity for homeowners. Year over year, every quarter. It's not. There have been some months where there's a pullback, but essentially, this information is tracked by, I believe this came from ICE Mortgage Technology. ICE basically runs point of sale for most large mortgage companies. Yeah. But essentially what they said is at the end of Q1, homeowners have $17 trillion in equity, $11 trillion of which they can access, which they define as you can do some type of a refi or a HELOC, home equity loan, and still have 20% equity in your property.
You say trillion?
I said with a T. Yes.
Goodness gracious.
I actually put that in the notes as well to make sure that people saw that.
That's a ton.
So, so $11 trillion of equity that could be utilized. I think probably the majority of people are not using that because they see their 2.5%, 3.5%, 4% interest rate and say, well, there's no way I can get to this. There are definitely some ways that you could get to it, right? You could sell your current home, buy a new one,
But it's kind of, I don't mean to cut you off there, but I'm still stuck on this trillion thing. Like 11 trillion of tappable equity, just for our audience, one of the largest years we ever saw in the history of like lending was around that $7 to $8 trillion range. That was like the most we could get in the system. There's 11 of it sitting out there that's either refinanceable, but then there's, or then there's combined with that 17 in total that you could almost see like a musical chairs take place, right? Like that could come in, get refinanced, or come in and get sold, buy, sell, keep going. That's a lot of volume that could come up if rates cooperate in any fashion.
Correct. Yep. And
that's incredible.
As this lending update goes on, we're building to that thing for sure. But
sorry, skip that.
No. It's like we'll get there when we get there. But I just wanted to take a moment in this lending update to highlight, well, what can you do with that, right? Obviously, you could sell your house. You could buy a new house, right? You could do a cash out refi, which there's not a large segment of people that would want to do that or would really benefit from that. But another thing that we've seen of recent is, hey, the people that do want to buy a new home, they ultimately want to sell their house and not end up with a mortgage on the other side. So there are bridge loan type products where you can take the equity from your current home, use that to buy the new home cash, and there's no prepayment penalties. So there are options there in terms of what would be a true bridge loan that would allow somebody to go be a cash buyer and then not have some type of a requirement to keep a mortgage for any period of time. But something that I think a lot of homeowners also are missing the mark on is taking out a home equity loan, whether it's renovations, consolidating debt. People see a home equity loan rate at 9, 10%, and they say, well, why would I want to do that?
Right.
Well, some of the things you want to consolidate are 13, 14, 20, 26%. So there's a lot of opportunity there as well. And if you're a real estate agent listening to this, well, why would I care if they take a home equity loan out? My rebuttal to that would be the better position they are financially, the more likely they are to make a move in the future. So if a home equity loan allows them to put themselves in a better financial position, free up cash flow, pay off higher interest debt, that sets them up where if we get a little bit of relief on interest rates and then they can go buy the move up home that they've been waiting to buy, for quite some time, then they're now in a better financial position to be able to do that.
Yeah, and all those equity lines are designed to not evaporate all that. Like, they only go to like right at 90 if you're lucky, right? So they always leave room there for the sale of the property as well as a little equity for the homeowner as well. So I think it's a very, very great point and some good inside information there on that. And the other thing is this: if you're fixing up your home, any agent will tell you, depending where you put that money, master, bath, kitchen, you're going to raise the value of the home dollar for dollar at that point in those particular areas, right? Now we'll go throw a pool in there. That's a different story. But, like if you're doing it in those marketable areas, you're actually increasing the value of your potential sale as well. So that could be another trade-off on the renovation side of things.
Yeah. And if you're somebody that's kind of stuck in move-up limbo where you were waiting for something positive to happen with interest rates, well, if you can use that home equity loan to get your home sale ready, right? You're just putting yourself in a better position, right? And that's, once again, probably doesn't apply to a ton of people, but there's a segment of people that I think that would apply to.
Yeah, leverage. Very, very important if you do it right. So the interesting thing is that, again, going back to that naysayer mindset of the world's coming to an end, Chicken Little over there about home prices. But the reality is we continue to beat expectations, and home prices are continuing to show major resiliency and upward movement here. And I think that an interesting thing is, we heard, I heard Alex Stewart say something the other day, and it was interesting. I heard it before, but he's the most recent person I heard it from, was that people feel like you're buying at the peak. If you average and look at the last 4 years, you're always buying at the peak, right?
Correct.
And so this is just kind of debunking some of that negative naysaying. It's really incorrect. Logan Montashami Moshami on the Housing Wire, he went ballistic on these guys recently, and these guys being people in general and YouTubers that have no economic background. They have no education in this. He's like, they are screaming things that are incorrect.
Yeah, he calls them the Crash Bros.
The Crash Bros. That's exactly what he said. And he goes, they're here because they're just bearish, right? They want to see everything collapse. And he was like, why? He's like, so that it can benefit them down the road so they can do it. He's like, and they're upset they didn't buy now. He's like, no one tells you can't buy now. Join the party. We'd love to have you. He's like, the reality is you're just sitting back wanting negative stuff to happen. But this appreciation keeps beating forecasts.
Correct.
Keeps showing resiliency.
And to your point, I mean, if you're somebody that wants to invest money and you go to a financial advisor and say, when should I start? They probably wouldn't say, well, wait for a huge pullback in the stock market to do that. Even though the stock market pulls back a heck of a lot more than home prices do, right? Mm-hmm. We've got a much better chance of actually of being successful in that, although the odds say you're not going to be successful in that. So if you're talking about home prices, I mean, there's really, outside of 7 years historically, with 5 of them coming in one recession, I mean, you're unlikely to be buying at a level that's not a peak of the market, right? So, but I really just thought this is interesting because CoreLogic started the year out and said, well, we think prices are going to go up by 2.6% in 2024, which is still healthy appreciation. But basically they are at single-family home prices rose by 5.3% year over year in March. And it's the 5th consecutive month that price gains have remained above 5%. And it's the 146th consecutive month of annual home price growth.
I mean, incredible.
So I just thought it was funny that here we are not even into, this came out, this data was through March, and CoreLogic has already said, well, we think home prices are probably going to stay above 5% for most of the year.
Over 12 years of consecutive growth. 12 years of consecutive growth, right? During all this trend, right? And another thing is this, we've had a couple of audience members on YouTube, and you can check us out on our channel at What's Your One More with the number 1. But we've had some people come in there and go, CoreLogic, like, God, unreliable. Why would you use it? And I'm like, I realize, like, we're not sponsored by CoreLogic, but guys, we're also using Zonda information. Not yet. We're also using Zonda's information. We're also using the FHFA index. We're also using the Case-Shiller index. Like, there's other indexes that support exactly this, that show these upward trajectories. And here's the other thing, going down to it. If you don't believe that 12-year run-up, look at what's happened to the conventional loan size every year over the last really 12 years. What's happened is I don't think it's exactly 12, but boy, there's been one heck of a run up from about 2013, 14 to where it is now. I mean, it's humongous. Hung around that 417 mark forever, and now we're what, 726,500? Is that right?
766.
766. So you're at 766. I mean, over 300,000 in gains right there. And that's all. That whole reason that goes up is based on those appreciation things. So it's to your point, 146 months of consecutive growth.
Well, now that I have some feedback, we'll come off CoreLogic and find a different data point that supports our narrative. Right?
Yeah, exactly.
I try to keep it diverse here with the different data sources, but I mean, CoreLogic is a mammoth of information and data. So generally speaking, they have what I would say was pretty good data. But I just thought it was interesting though. Also, the chief economist at CoreLogic mentioned a lot of things we've been talking about, but essentially her takeaway was that home prices are increasing beyond the typical seasonal uptick, despite high mortgage rates and despite homeowners insurance costs going up and property taxes and all of the challenges there. Mm-hmm. And she points to interest from households with larger budgets. So it just points to the fact that despite inflation and elevated interest rates, there's a subset of people that have done well through COVID and are making more money. And a lot of that is offsetting the difference in the mortgage payment with higher interest rates. And that's the piece that I think the news misses a lot is a lot of the people that are buying right now at 7%, well, they're making a lot more money and maybe it's not dollar for dollar more affordability, but it significantly lessens the blow of this mortgage payment on this house is $1,000 more per month than it would have been at 2020 or 2021 interest rates. And that's all they say. Well, a lot of those people are making more money as well. And
correct.
That doesn't apply to everybody, but it applies to enough people where home prices are still going up despite interest rates that have, for the most part, started with a 7 for the better part of the last 12 to 18 months.
Yeah, and I know we're going to talk about this and probably get into it, but you and I we were afforded the opportunity to sit down and fireside chat with Raphael Bostic, who is the head of the Atlanta Federal Reserve. He's also a voting Fed member. So this is a really cool moment for you and I to get some insight, and some Q&A was asked. But to that point, he made it abundantly clear, and I know we'll talk about this in the next episode, so tune in on that part 2. We're going to talk about that. But he made this abundantly clear that, hey, what we're finding is, to your point, at the top of that K-shape, the people that have done well, they're not really impacted by inflation, to your point, not dollar for dollar. He's like, and there's a slight portion of them, right? And they're fueling the economy. They're spending money and they're doing their thing. But then there's the people that didn't get that bump, that aren't seeing the wage growth. And he's like, they are dramatically, and there's a lot more of them than there is the other. And that's a lot of where the brunt is being bared, or bearing the brunt, however you say that. But anyhow, that's where it's happening. And he said that's one of the things that they're continuously watching because they want to help create some relief there. That's what they're searching for, which kind of goes to your point about, people that made more during COVID are not really experiencing the dollar for dollar.
Yeah, I don't know how they're doing anything to help those people right now, but maybe I'll be proven wrong. But
we didn't get to ask that question.
But, to kind of put a bow on this, if you look at sellers saying or consumers saying it's a good time to sell, you look at homeowner equity with new peaks, you look at home prices still going up. If we do get a little bit of relief in mortgage interest rates, I think that all of the signs are pointing to you're going to have a lot of activity. You're going to have a lot of demand. You're going to have a lot of sellers that are now in the market to sell and buy, and something to kind of keep an eye on, right? We think that there's a storm brewing in a good way, right? It would be good for us, right?
Yeah. Buyer demand, pent up storm brewing. I love audience members that are like, of course mortgage guys are expecting this. Well, you're right, we are, but the data is also suggesting it.
Yeah, I mean, we're expecting it. Do we think it would happen a little sooner? Sure, but to think that if interest rates come down that won't happen is probably misguided.
Sure. Yeah, and as we're going to go into part 2 of this, so stay tuned because we're going to talk more about that conversation with Bostic and interest rates and the impact and influence we think is about to happen here, and why, and how he supported some of the data we've been saying, but also through a couple curves very selectively that we're going to talk about. All of this revolves around affordability and rates, right? So as rates start to kind of unfold, don't you think the best thing you could do as a potential buyer, real estate agent, is familiarize yourself on how to get the best rate? Right. 100%. Learn now so you can attack when it happens. How do you get the best rate? Well, you've got some resources for our audience. Again, this link is going to be in our YouTube channel at What's Your One More. Do you want to tell them more about this here as our producer puts it in there?
Yeah, we continue to get a lot of good feedback about our guide on the secrets to get the best mortgage rate. Mm-hmm. And for a lot of people, rates may not be to a point where they're ready to make a move yet, but this guide is intended to give consumers all the information they need to know what questions to ask and how to best position themselves from a rate perspective. So if you've got buyers just sitting on the fence, waiting on interest rates to come down, you can use this guide to stay in touch with them and make sure that they're still doing the things they need to be doing to make sure that when rates come down, they get the 5.75 and not the 6.25.
Yeah.
Right.
Well said.
And it's a tool that, like I said, it's just designed to keep customers engaged and looking ahead to better days for interest rates. And then obviously the people that are ready to buy now, what can we do in a short window to maximize their interest rate and get them the best possible loan?
Yeah. And guys, again, I'm going to continue to say this. We'd love for you to work with Daniel and his team, but you can use this at any lending institution you go to. But hey, if you're going to use it, give Daniel a shot. You can always check him out at BOEJax.com. You can go there. All Daniel's information, all of his handles will be on this YouTube channel as well. Lots of energy and effort into this, man. Great job. I appreciate that. I think this is a wonderful tool. We're going to keep talking about it.
Cool.
Yeah.
Absolutely.
Hey, one last thing before we wrap up this episode. I would love to know what rate, if you're an audience member, what's your rate? What's the number? What does it have to be? Where's it going to be at to make this work for you? If you own a home, you're looking to either refinance or you're looking to purchase another home, let us know. We'd love to get your feedback, and we're going to continue this on in the next episode. If you like what you're hearing, 5-star review this podcast. Please share it with a friend or family member. Also, check us out our YouTube channel at What's Your One More with the number 1. Till the next episode, we will see you guys for the ultimate rate conversation here in the part 2 of the lending update. Dan, thanks again for your time.
Absolutely.
All right.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all into it, yeah.